Good morning, legends. Hope you're all feeling good today. Welcome to this Wednesday update. I'm going to do this video a little bit differently today. As you can see on the screen, I've got some things marked out there that I want to talk to you about. I want to take a bit of a wider look at Bitcoin. As we know, we do have the FOMC meeting coming up. Very difficult to try and pick the direction of Bitcoin before that announcement is actually made. So better to look at bigger timeframes and see if we can find what's going on there. If you're new here, welcome to the channel. It's lovely to have you here. If you're returning, welcome back. Don't forget to hit that subscribe button if you haven't already. Hit the like once I've said something that resonates with you, and be sure to leave a comment in the description below. All right, let's get into this. What do I have on my screen and what do I have to show you? So I want to talk about the market maker method on a daily time frame and what has happened in the past to get an idea of what may be going on right now, and hopefully help us to decide if we really are in a bear market or just an accumulation phase. Going back in time when we had this first run up from when Bitcoin broke its previous all-time high up at around just under $65,000, the area that I want to focus on is this area here. Now, what happened on this peak here, it also happened on this one, but we'll focus on this one for now, is we had this M formation, which is the kind of M that I personally don't like to trade, but it is a valid M. So it's an M where the second peak is higher than the first. The reason that that happens is because when they peak the first time, or they may have intended for this peak here to be the M before it played out. In this second peak here, they would not have picked up the liquidity that they needed to run the market down. So this was always the intention anyway, but they needed to encourage more people to make the wrong decision up here so that on the way down, everyone's stop losses become their liquidity. When an M formation is created like this and they can't get enough, they come back for the level again and usually spike higher because they know that this here will stop out everyone's short stop losses who actually got it right the first time and shorted from here. So that's what makes this a valid M. I personally don't trade the M pattern when the second peak is higher, even though I know that, because it's tricky and the market structure hasn't actually changed. It is technically a higher high, so it's hard to pick it. Usually it will follow with a lower high anyway. So if you missed that one, you would then have seen this M formation here anyway, which fits in the rules, and you could have shorted from there, right? So going back to the original M, after we had that M formation, we had the level 1 drop here, which created the right side of the M, and we can see that because that's where the volume spike was within this range. Then we had a bit of a retracement and we came into level 2. Throughout this drop here on level 2, there were a lot of times that you can see here with the red candles there that it was super high volume bringing price down. And then here we went into consolidation. So we went into a pretty wide range boardroom for a while. If we mark this out before the next push, it was 26 days, so almost a month worth of sideways consolidation. So this right here would have been the boardroom where the market maker is trying to induce people to make a decision. You can see here we have spikes to the high, spikes to the low. This is inducing people to take long positions. This is inducing people to take short positions. Then they came out here, pushed up, and this push up took out everyone who went short down here. Then they came back, reversed it, and this reversal here took out everyone who went long up here. That drop there also caused drop level 3. Now, when you look at this whole period of time before we actually ended up shifting out of this range, we're looking at 62 days. So 2 months worth of sideways price action, basically. Now, when you have an M formation into 3 level drops on the daily time frame, the level 3 is going to take a long time to play out, because what happens is you usually have momentum in level 1 and 2, and then level 3 tapers off. So this played out to a T on the daily time frame. However, this period of time here, this 62 days on lower time frames, was very difficult to trade unless you were on super low time frame scalping. You could could get pretty good scalps between this range, and then it got harder into this area. Now, at this time, back in July, when this was actually happening, what we had here was we had 3 spikes to the low. Without breaking the level, a reversal is imminent. That's the rule of the market maker method. So in this situation, we had 3 spikes to the low. We didn't break below the level, and the reversal followed. This bullish engulfing here on this daily was where I made the call for everyone to get back in. Not that anyone should follow me, not that that was financial advice, just for myself, I felt very confident that that was going to be an area to get back in. The bull market was in fact not over. Then we did get into the second peak from there. Now, with this one, if you compare the two, look at the volume here. So just look at these green ones, for example, compared to here. We actually did not have rising volume as this second peak was coming up. In fact, if anything, we had declining volume the entire time. So there was a divergence on this peak between the price action and the volume. Whereas on this peak on the way up, we had rising volume and rising price. So this push here, at this point in time, everyone thought this was just the pullback and we were going to go up to 100K. Now, I have a video that I posted on this channel, so it's time-stamped and you can go and see. And it was in November or October, I think it was, where I discussed my crypto exit plan and said that I won't be holding through December. That I would be, I think it was 80% out or 90% out by December at the latest. The reason for that was because of the market maker method. So number one, declining volume, rising price. Number two was I could see we had this rise level 1, this rise level 2 here. So rise level 1 is basically this whole area, rise level 2. And so what follows is rise level 3, but level 3 tapers off into consolidation. So I wasn't expecting from these two big moves here for price to go much higher after this. So when we come up here, now when you look back in time, this here looks very similar to this, right? And we have the same M formation reversal. Whether you draw it as the M with the second peak being higher, or you draw it the way I originally had it, is irrelevant. They were both M formations. So the same thing. It could have been that the market maker intended for this peak here to be the original M formation. So they came up, they reversed it, they spiked one more time to encourage more people to take a position in the wrong direction. In this candle here, they may not have picked up the liquidity that they needed. So they revisited the level, took out the stop losses here of the people who originally got it right by spiking higher, and then they reversed the market. Typical pattern played out exactly the same both times. Then from there, we went into drop level 1, drop level 2, and drop level 3. And now this whole period here is the same consolidation period, but on a much wider level. So if it's on a wider level, we have to ask ourselves why. It's very clear to me that the market maker is accumulating in these zones, right? Anytime price goes sideways, the market maker is accumulating. We have been sideways now for 99 days. I think today is day 100. No, it will be when the candle closes. So 100 days. So 100 days of sideways price action, I think that is cause for celebration and time for me to tell you when I believe the bull market is returning. Before I do, disclaimer, these are just my own thoughts. This is based on technical analysis that I follow. It's not a guarantee. You still are 100% in control of the money that you spend on any investment. Here's what I think is going to happen. See here how we had these wicks to the low previously. Then the final one was a full candle before we had a shoot out. At this point in time, it looks like nothing now because we've had so much price action. But if we spread that period of time out here, people would have called this right here as a lower low, right? So The reason being, this would have been marked as people's support levels because we have candle closes here. They come down, spike the lows. This has encouraged many people to go short because for now, 60 days, people have been waiting for support to break and assuming we're going down to 20K. And people who are bullish are saying that support is holding and they're opening long positions. So on the final push, the market maker pushes the price down, takes out the stop losses of everyone who went long and actually got it right. But at the same time, they induce people to open short positions because now we have full candle below support. They trap those short positions and then they swiftly shift out of the range, right? So keep that in mind, what happened right here. When we look at the current price action, what we want to be looking at is where is the imbalance potentially right now that's going to allow the market maker to do a fast shift like that again. So what I'm going to do is add in the VPVR and we're going to have a look from this area to where we currently are to see what's available. Whilst I'm adding that indicator, guys, this is top class education. If you are enjoying this so far, even if I do say so myself, I'm calling it. That is one thing I can 100% call. I give you my best on this channel. I don't hide anything. If you're enjoying this type of education and it's making sense to you, please just show your gratitude with a like, a subscribe if you feel inclined to, and a comment below. I really am trying to crack the big numbers on this YouTube channel because I want to break that assumption that you cannot learn anything valuable from YouTube. That is my goal in life. I believe that you can, and I want to show the world that that is possible. So it would mean so much to me if you could support me with just a like, a subscribe if you like this education, and a comment below because it really does help to get my videos pushed out by YouTube to more people. Now, let's zoom in on this VPVR level that we're talking about. So we can see here, when the VPVR spikes out like this, that basically means that people are happy to transact in this range, right? This dotted line that's going across here is the point of control. So when price drops below, we can expect that we're potentially going to come down to fill any imbalances below. When it pushes back above, we would expect that price is going to come and fill any imbalances above. Now, currently, the imbalance that I can see that sticks out below where current price is just happens to line up with that yellow line, if you can see there, is the monthly support level at 39,974. So let's call it 35,000. At the very same time, we can identify this candle right here as a candle that's yet to be fully filled in. So we did have 1 wick below, but we haven't had candles fully come back into this area since we hit it here at the 23rd of Jan this year. Now, should we fail that, should we get a full candle close, it's possible, again, that we come back down to this level. However, until we actually break it, I think it's unlikely. Of course, we do have the Fed meeting coming up and, it's going to cause a lot of volatility. Whether that's going to be volatility to the downside or the upside, we don't know. But it is possible that any news play between now and the time we actually get back to this level could cause Bitcoin to do something like this first, then visit that level. So from here, I would not be expecting a breakdown straight to here. It is possible we rally first before we reject. It's also possible that we rally up to here before I don't think it's likely, but it's possible. So I've always said, for as long as we're within this channel, anything below the center dotted line of the channel, you should be selling the tops and looking for shorts. So whilst there may be a long position to take up here, if price does bounce, the bigger play is going to be taking the short from the top until it actually can break that center line. So short term, possible rally would not say that the rally is going to turn us bullish just yet. I do think at some point in time, and I do think that it's going to come this month, that we are going to have a false move to bring in hope. I don't know where that false move is going to run to, but just like this here, if you were around in crypto here and you remember this, once we started to hit around 47K again, everybody was bullish and thought, oh, finally the bear market is over, 100K coming in again, and we were looking for M formation reversals. So just beware, as soon as we start printing green bullish engulfings, if we remain above this channel, people are going to start calling 100K again. There are still many conditions to meet before we even have a chance of breaking the last all-time high. So I would still be selling the rallies at least until probably halfway through this month. As a long-term investor, I do think we are nearing the end of this accumulation phase. And I do feel that by the end of this month, we'll be bullish again. I think that the whole sell in May, go away will play out. And any big sell-offs, I am happy personally for myself to dollar cost average into. I always dollar cost average anyway, regardless of price, as an automated method. But as far as my trading profits, anytime Bitcoin falls under 40K, so between 30 and 40K, I'm happy to buy anyway. I personally don't think that we're going to break 30K. Until we can break this, that's not a consideration in my mind. So always keep capital ready in case we do break lower levels. Never go all in on one thing. If I'm wrong, if we do break this level and we do end up back here, I'm going to have reserves to continue to buy, and I don't care, because for me, I'm a long-term investor in cryptocurrency, and the only question I have to ask myself is, do I think Bitcoin is going to be worth more in 10 years than what it is today? Because in 10 years is when I'll be cashing out as a retirement fund, right? So if I think in 10 years it's going to be worth more than 37, I'm happy to buy. If it drops further and we get down into here, do I think it's going to be worth more than 30K in 10 years? I'm happy to buy. It makes no difference to me. I think the biggest mistake you can make in crypto, if you want to invest, is to A, have a short-term plan, and B, put all your capital in at one price, and C, not give it the time that it needs to do what it's got to do. Always have a cash reserve. You're never going to pick the absolute bottom. You're never going to pick the absolute top. No one can do that unless they are the market maker who is designing the top and bottom. Your goal isn't that. Your goal is to just get close enough. When Bitcoin in a typical cycle does 1700% and I'm willing to hold for 10 years, that means I've got 2 cycles after this of 1700%. I don't care if I'm buying it now and it drops another 10%. So moral of the story is, I do think we're going to come back and revisit this level at some point around 35,000. Potentially wick into these areas because we've been there before. And if we do wick into those areas, it's because it's trying to recover this candle here. However, as long as we stay above that candle, that could be the low. So if price did break through this level here, the next level is going to be here at around 32,000. I don't think we're going to go lower than 32,000. I really don't think we're going to come back into this red candle. This candle here is the imbalance. You can kind of see on the VPR there, right? So if price were to come all the way down here, it's only coming down to refill this imbalance here. And this is the area to watch to see if it bounces. So for me, if price comes down into this 35, instead of convincing myself that it's going to 32 and not buying, it's only a $3,000 difference, right? 10% difference. So I personally would rather not miss that in case it doesn't come all the way. I'd buy a little here, buy a little here, buy a little in the middle, and just keep staggering down until the bottom is actually in. And then when it comes to altcoins, I personally wait for Bitcoin to actually bounce before I then go back into altcoins. I still have money in my top 6 altcoins, which I've covered on this channel. If you want to watch that video, I will link it up here somewhere, but it's called Altcoins to Invest in, Follow the Big Money. So I do still have money in those altcoins already. I'm always dollar cost averaging into them, but I would add my final allocation of those after Bitcoin actually bounces. So for the long term, I still think a fake out will come to encourage people to take long positions to trap them. Then we're going to have the one more dramatic sell-off, because if we do come down into this 32K range, everybody who trades diagonal supports and resistances, which I don't, right? They're going to say this one's broken, I'm out. So the daily broken, I'm out, fully bearish, we're going to 20K. Then this one here is the weekly and monthly trend lines. So they're going to say weekly, monthly trend line broken, I'm out, we're going to 20K. They're going to spike the low and then they're going to reverse it. Everybody opens short positions. Exactly what happened here. Spike the low, reverse it sharply. Everybody gets taken out or trapped. And those who want to long are late because price just moved out very, very sharp. To get in anywhere here would be a terrible risk to reward. So that's what I'm thinking long term. As far as timeline, the FOMC meeting is not my focus to try and pick the direction right now. I'd rather just let that play out. The FOMC meeting announcement could be this rally here. I don't think the FOMC announcement is going to be the thing that leads to the final shakeout. I think that there will be something else. There will be more coming. And I'm filming this on the 4th of May. This move here to the upside could happen anytime between now and say around mid of the month. Then come mid-month, I see this part happening. We'll settle for a bit because there's going to be a lot of fear. So we'll then go into just a sideways consolidation, another boardroom down here somewhere. From the boardroom is where we start to look for signs of market structure change, and that may happen sometime between middle to the end of the month. So not bullish now. I'm going to be watching for a fake out first, then just understanding the psychology of people. If we've broken these levels, people are going to sit on their hands and be scared. So we have to go into a boardroom. We have to go into sideways price action for a little bit to try and encourage people to give it another chance, to take another position. And once those positions have been built up, that's when the market maker will come in and shift out sharply. That will be the time to reassess whether we think they're going to shift out sharply to the upside or the downside. So if all of this plays out and we happen to get this fake move and then start to head down again, we'll reassess this. But as an idea in advance, this is what I'm personally watching for. And even if the FOMC brings out news that pumps the price, I don't think that is going to be the beginning of the next bull market. I'm also not saying that after this, we're going to 100K. I just think that it will be the end of the accumulation period and we'll start moving up from there in a nice trend again. How high, we have to assess as we go. I don't really like to make calls that far in advance when there's nothing to base it off. So I hope that was helpful. Bit of a different video today. Now for my short-term traders, let's just take a look at where price is now and where the liquidity is. As I'm doing that, guys, just to be clear, there are so many scam accounts out there right now pretending to be me, to the point that I'm losing sleep at night because I'm constantly getting messages from people saying, is this you? Is this you? I can't answer the messages anymore. Please understand. I'm not being rude. I just can't continue to write the same thing every single day. If you want to be in crypto, you have to understand that there are scammers and you have to take responsibility for your own money. Don't give your money to people promising returns, no matter who they look like. If you follow me, then you will know that I have never on this channel said, invest with me, I promise returns. I've never said that. You've never heard those words from my own voice. So why would I write it in a text message? Don't fall for scams. The only way to make sure that you're following the right social media account is to go to my channel, click on any of my videos, click on the description down here, and it says here, follow me on social media. This is the only link to follow for my official social media. I have reported every scam account. This takes me so long every single day, but these social media platforms don't do anything about it. I've even had them reply to me and say that there is no violation here. I don't know what else to do. You're messaging a powerless person when you tell me about it. Just report it as soon as you know. Report it to the platforms that actually have the power, and make it your mission to learn how to invest and increase the value of your cryptocurrency yourself. You shouldn't be falling for promises that somebody else can promise you returns. Now, looking at high block, look how empty this is. There's very many white patches here, around where price is currently. Anyone trying to guess the direction right now is just getting straight out liquidated because we're up, down, up, down, up, down. There's also very, very small circles here. People are not inclined to take a position right now. Looking at the delta down here, we're at 6 billion to the shorts. I think people are sitting on their hands until FOMC, but the problem is going to be that people are going to try and trade the FOMC price action because they think it's going to be the final change in trend. Just be careful. You can see here, you can see behind the scenes that at some point market maker is going to have to encourage you to take a position because he needs your liquidity. Right now, they don't have it, not close to price anyway. They have liquidity down here and they have liquidity up here. So they could either just drive price all the way up to take these out, or they can drive it right down to take these out. It's going to be a very risky play if you try to trade it. Let's take a look at the heat maps. Now, again, I am filming in the dead gap zone. So usually when you look at heat maps at this time of day, all you really find is the area that they're trying to hold price, so that for the Asian session, we just hold in a range to set the high and the low of the day. So it's looking like the low of the day currently is somewhere around 37,150, 37,250 kind of area. If we break that, we do have this level here at 36,550. Above price, looks like we're trying to hold here at around 38,250. But if we push up higher, then previous high of the day is still the level to watch as well at 38,950. Now, again, we do also have levels much higher than that. The thing to watch for, whilst price is going sideways and these orders are just sitting here, I think they're orders that sit there as a just in case trade, like a lucky dip trade for people who are just anticipating a FOMC pump, pick up their trades up here and a dump. And then the other way, they're anticipating the same thing, an FOMC dump, pick up their longs and then a pump. I don't think this is the time to rely on those higher levels based on that. In my opinion, they're people just waiting to get lucky. The fact that it's been sitting there for many days as well, and it's been changing back and forth. It's been increasing and decreasing. So they're probably just looking at the sentiment on social media and just trying to make a call off it. I wouldn't necessarily trust these higher levels. All I'd be looking for now is where are they trying to hold the range, and just at a glance you can see that they're trying to hold it at previous support here and they're trying to hold it at previous resistance up here. So for me, I'm only just looking for the longer term play. I'm looking to see if we come down into these ranges and it's time for me to dollar cost average some more. I'm not interested in trading the short term timeframes on this until after the meeting announcement, and at that point I'll be able to look for a midweek reversal. Hope you enjoyed this video, guys. I hope you got something out of it. If you did, please don't forget, smash that like button, hit that subscribe, turn the bell notification to all, and leave me a comment down below. Do you think the bull market is close to returning? Have an amazing day, and I'll see you tomorrow.